All right. Welcome back, everybody. Long time no see. About an hour ago. We got a very special guest tuning in today. We've been hyping this up since Friday. I'm pretty pumped for it. Um, he was the winner of the 2020 U.S. Investing Championship, putting up 941% returns in a single year. Couldn't hit 1,000. That's a shame. Welcome, Oliver Kell, here onto the workshop. Just wanted to say we really appreciate you coming on, hop with us, taking time out of your day. So I think we're just going to start here. You got a brief PowerPoint ready for us, just kind of explaining what the basics of your system and whatnot.
Yeah, so one, thanks for having me, guys. I appreciate it. Happy to be here. And yeah, I'll just kind of my strategy is pretty simple. It's more the implementation of it that is where the skill is. So I'll kind of run through that real quick and then I can answer any questions or look at the market or whatever you guys want to do. But I mean, I named it the cycle of price action just because as I show it to you, or it seems like you guys kind of already know what it is, you'll realize like it is just like a cycle up and down, throughout the year. But basically, the simplest way I can describe what I do is like I have a moving average crossover system, but I'm looking to anticipate changes in the trend via like price structure, which I'll go over that a little more here in a second. And then there's specific areas that I'm looking to execute. So I think a couple times during each trend you get low risk areas where you can risk a little bit and hopefully make many multiples of that. And then also as you trade it more, and I'm constantly getting better at myself, you can kind of understand where you're at in the cycle, and hopefully that can help you sell into strength, or just understand when you want to be less aggressive or more aggressive. But so that's a quick intro on it. But basically the cycle of price action for me, it's an objective overlay to keep you on the correct side of the market. In a green light environment, a market where you want to be long or looking for longs at least, you're just trading above the moving averages, or the price structure, the higher highs and higher lows are setting up to at least take out the moving averages. That would be the first time I would look for a long. And then a red light environment would just be you're below the moving averages. You either want to be short or in cash. And then you want to adjust your market exposure and aggressiveness based on where the market is in its cycle. So for example, near the beginning of a trend, or here, let me go to the next slide. All right, so here I'll run through this. So I use the 10 and the 20 period moving average, and I use the red moving average as the 10E, and I use the exponential moving average. Basically, when I first started trading, I prop traded, day traded, and these guys who I followed used the 10-20 EMA on the intraday chart. They actually used the 10, 20, 50, 200 SMA on the daily chart. And not even then, but a couple of years later, after like trading for years and winning and losing and never really truly figuring it out, I just kind of decided, what if I use the 10-20 EMA on the daily chart? And I've been using it ever since. There's no fine story on why I came up with it. I just started doing it, and it worked for me, and I haven't looked back. I've constantly just tried to refine it. But basically, the way the cycle works is the beginning of what I call an up cycle starts when you have what's a reversal extension. You can essentially think of that as capitulation. So you're having a down cycle, the market's trading down, the volume's starting to increase, and at some point, the market blows out, capitulation occurs, and you rip back. And really the target off of a reversal extension, if you were to trade it, would be the 20 EMA. And this is fractal, so it occurs on all time frames, whatever you guys like to trade. My main core trading time frame is the daily chart, but it occurs on all time frames. And then so the volatility between the extension and what I call the wedge pop is pretty extreme. So sometimes it'll like rip back, but then it'll like tank back down. And sometimes it can take a couple weeks for, the market to contract and the price action to tighten up. And then you get the wedge pop where you're basically breaking out of this contraction in price, and you're in, doesn't have to necessarily be a move back through the moving averages. That's kind of what everybody thinks. It's really based on the price bars and breaking through this contraction. It just often happens to be through the moving averages. And that is really the first time where I'm looking to kind of get swing long. It's not that I won't play the extension. Sometimes I will, if I see it perfectly. But I've learned via having a big gain and then giving it back, that it's often better for me to just kind of sell the extension out and just wait for this entry here, because at this entry is when the market starts to trade more uniform and better. And as a swing trader, at least for me, because there's tons of different types of swing trading, it's easier for me to hold a position when volatility is lower. So we'll get the wedge pop. That's kind of the first time I look to get long the market. And then I think the second best time to get long the market is when I have what's called the EMA crossback. So you pop up and hopefully you extend. I mean, the more you extend higher, the better. It just means that the stock's more powerful. Inevitably, you will always come back and test into the 10 or 20 period moving average. Sometimes it might be the 20, sometimes it might be the 10. It just kind of depends on the personality of the stock. But that area is the next area to try to get long a stock. And I would say these two are the two optimal entries on a stock to get long. Reason being is because hopefully they're near the true turn higher, and you have more potential trend to catch. Then from there, we go up and you'll, if we continue higher, you'll have consolidations. They let the moving averages catch up and go higher. I call those basin breaks. You can have, in a good trend, you'll usually have like two. And when I say trend, I'm more talking intermediate term, maybe like 6 to 12 weeks or something like that. In a really good market, you can get many basin breaks, which is, really what we're looking for. But, just in my experience, you usually get like two on the average stock. And then you'll have what I call an exhaustion extension, where you basically extend away, from the 10-day, and volume heats up, the chasers are coming in. And if you see that correctly, ideally you want to sell into that, or maybe piece out a portion of your position into that. But the key is you don't actually know this is an exhaustion extension until it's confirmed by the wedge drop. So the wedge drop is basically, I'll move over here. You have the exhaustion extension, you trade back down to the moving averages, and then usually you kind of wedge up on a lower volume. Kind of the late people will start saying, oh, we're holding the moving average, and we're going to head back up. But we exhausted ourselves here, and the volume will show that. And there's usually light volume here, kind of wedging action, if any of you guys know what that is. And then the volume will come back in and will drop back down through the moving average. And to me, that's confirmation that this truly was an extension. So the way I think about it, ideally we sell the extension perfectly, but that's just not realistic that we're always going to be perfect. I do try to sell into strength. I think that's key. But if you miss it, this move right here is your, that's your safety net. Like, hey, you didn't sell it perfect, but you got to go now. You got to get out. And then this is also when you would look to get short. So you'd look to get short here or on this crossback. I don't like to short. I will take swing trades off these basin breaks to the long side. Usually I'm looking to sell them, after a couple of days versus hold for the whole trend, just because they're later buys. I don't look to do that on the short side. Just because I've done it before and gotten smoked. And typically the market has more upwards flow. Obviously, year like 2022 was more downwards. But even in those downwards markets, the trends down are typically not as long as like an uptrend in a good market, in my experience. And then you do it all over again. You have a reversal extension and you start a new upcycle. And really is what I try to do is I want to pair up the weekly, because this cycle occurs on the weekly, and the daily. And if I can get involved, let's say we're having a wedge pop on the weekly, and that might be like a crossback on the daily or something. That's a great situation for me because I hopefully can catch a long move on the weekly and manage it on the daily. So in a good weekly upcycle, you may get 2 or 3 daily upcycles. And I trade off the daily, but if we're in a weekly upcycle, like I'm just going to go to cash here. I'm not going to look to short. I'm basically just going to step aside and let the stock reset. And then I'm going to try to get back on board, once we turn back up. So I'm trying to marry up the time frames. And how do I kind of implement it all? So I got to read these slides more because I'm basically already going through this. The higher time frame for me is the weekly or the monthly. So I'm basically using the weekly, but I do look at the monthly to see the complete picture. How extended is the stock? Typically I want to move to be somewhere in relation to the 10-week moving average when it starts. For no other reason than if we're not near the 10-week, it's going to be harder to catch an extended move. The tough thing there is when you get a big earnings gapper, it'll look a little extended. So like, how do you play that? It's not perfect, but these are general rules. Are we breaking out of a large multi-month base? If we're breaking out of a multi-month base, you got your better shot for a big move than if you're trading, some like 5-day bull flag that's extended from the 10-week. That might even be a trap. So I'm looking at the weekly or monthly first, and then I manage my trades on the daily combined with the 65-minute chart. So I'm looking at the daily bars and the daily moving averages, the 10-day and the 20-day. But then I'm watching the actual price structure, the higher highs and the higher lows on the 65-minute time frame. And I will keep the 65-minute 21 EMA or 20 EMA, doesn't really matter, and the equivalent of the 5-day on my 65-minute chart. And a lot of the time I'm ideally, if a market stretches up, I'll kind of wait and I'll buy that pullback, and try to buy the higher low in an uptrend on the 65-minute. And then, from an actual straight up execution standpoint, these kind of overlap because I am looking at the 65-minute a lot, but I use the 30-minute, and same deal. I put the daily 5, 10, 20 EMA on the 30-minute, and I'll look for reversal bars off the 10-day or the 20-day, stuff like that. And then there are situations, like if I'm looking for a breakout where the daily looks great and I'm looking for a breakout and I think it might happen on the open, I will zoom into the 10 or the 15-minute, and I use pivot points to try to buy support, and I'll keep the VWAP on there in the intra 20 EMA. But I would say more I'm focused on, the 30-minute and trying to buy into these moving averages or the 65, and less in the select scenarios where, I just know, hey, this thing might go. I got to be keeping an eye on it. And often it's on more the open than any other time. But the key is for me, I don't create trades on the lower time frame. So everything I do is driven by the weekly and the daily. If a stock looks nice on the 5-minute, I've been in chat rooms where people say, oh, there's like a flag on the 5-minute. Sometimes I'll look at that comment and I'll go look at the daily chart, and I'll just say, oh, like there's nothing there. And it might work, but it's just not a trade for me because it's extended on the daily or something like that. So the weekly and the daily drive everything for me. And then, so some advantages to what I do, it's reasonably objective, I would say. I can tell you there's certainly plenty of room to screw it up. but you're either above or below the moving averages. So like I see all these people, I was literally short the market into the low in October, and then I was pretty heavily long October 31st and November 1st. And I was real bearish on October 26th. That's actually when I covered, and it ended up being the low. I had no idea it was going to be the low at all. But we were below the moving average, and then when we got above it, I was bullish. Like it's really that simple. I don't like right now. Everyone says there's going to be a recession. Like sell the market. One of my sayings is I've never seen a downtrend above the 10-day, and I've never seen a an uptrend below the 10-day. So, if we're above the moving averages, typically I'll like the market. And if we're below them, I won't. And then it's fractal. So you can use this strategy. You could put a 10-month on the monthly chart and go look at it. You'll realize that, the markets respond on the monthly, the weekly, the daily, the 65-minute, whatever you want. You're just going to get more signals. The more signals and more fake outs, the lower and lower you go on your time frame, right? You're going to get more entries on a 5-minute, but you're going to get more shakeouts than a monthly, where you might get one signal every couple of years. Then price is the number one indicator. So the cycle provides a framework to analyze the only thing that pays, which is price. I'm typically always buying strength. I'm just adjusting my time frame to get there. So maybe we're pulling back on the daily, but I'm finding a reversal bar and buying strength on the 30-minute or something like that. And then a lot of people, because I'm influenced, I would say influenced by the Can Slim method or whatever, William O'Neill. Really, I just use charts and I pay attention to earnings and sales growth. But a lot of those guys use the 50-day and they say no one can make money using the 10, 20-day moving average. But really, for me, if a stock can't hold the 10 or 20-day moving average, I don't want to trade it. Because I'm not trying to own 50 stocks like a mutual fund. I'm typically going to own 5 to 10 stocks, in a really good market, maybe 12. But above there, I actually start selling stuff because I don't want to own that many stocks. So why wouldn't I try to trade the 10 stocks that can hold the faster moving average, that move quickly? Look, if you're trading under 25 million bucks, you're small. You're a small trader, and you can get in and out of stocks, fairly easily. So you might as well just focus on getting in, what you deem to be the best 5 or 10 stocks. And then it can also help you spot relative strength. So for example, with the markets, the index has moved where they've moved now. If some stock is only just taking out its 10, 20 period moving average right now, that's sort of a red flag to me. Do I really want to be in that stock? Maybe, maybe. I'm not saying definitely no, but it might be a laggard. And then there's no excuse to ever chase. If you miss that wedge pop, you don't want to chase it. You just want to be patient, wait for the crossback. It'll come eventually. So there's always another setup. So some disadvantages, there's whipsaw potential, and that, I'm using the faster moving averages. I sort of just think there's whipsaw potential because we're trading stocks. And, it's just kind of part of the game. And then it's trend following in nature. So, in a range bound market where there's no trends, you can get more false signals, or really because I use the faster moving averages, I sort of think when markets are moving up and down, I can still catch trades. It's way smaller trades, because things obviously don't extend. So, you could maybe go down and trade the cycle on a lower time frame, like the 65-minute or something like that. Which I don't switch my whole setup or anything, but year like 2022, where obviously the trends weren't there were a lot of great trends, but they were shorter. That's really where that 65-minute 20 EMA or 21 EMA, was really powerful because the trends just weren't as great. And then, you could view this as a disadvantage. It's discretionary execution. I think this could also be viewed as a major advantage, kind of once you know what you're doing. But, it certainly leaves the door open to emotional mistakes, or if you have the incorrect analysis of the market, which we all do for sure at times. That's why we use stops. But, I don't know. People think discretionary is like a red flag, maybe. And then it's not complete. So, I utilize a lot of other tricks. I like to take advantage of relative strength for stock selection. I love big gaps. So, I identify a lot of my stocks via massive volume, what I call bull snorts, which often have a big gap. So, I think that's probably more important than any set of fundamentals out there. But things called like that I call a wick play or inside bars, obviously support resistance. I use a lot of kind of candle patterns, especially on those 30-minute charts, and I'm buying reversals. Volume for me, I don't know how anybody trades without volume. It's just I could throw out all the moving averages and everything, but I definitely could not do what I do without interpreting volume. It really tells the story. And then fundamentals, so proper stock selection. I look for stocks that have big earnings, big sales. I think a lot of these tech type stocks that I trade, the revenue growth is actually almost the most important thing. But really a lot of moves in stocks they have a huge volume signature near the beginning of the move on the weekly bar. So just like a huge just punch of volume. And that's how I find a lot of my stocks. Often that's because there is a big upside earnings surprise, or there's some change in the underlying fundamentals. But I actually think that a lot of the times I'm on stocks, and then I do have software that I can look at the fundamentals, and I'll go look at the fundamentals and I'll say, oh, like that was a good earnings report. But that's not actually why I got on it, but it's it's a nice thing to see. But then mostly the well-trained eye. So I'm sure some of you guys are learning to trade, or some of you probably traded a long time, but I think the key to learning to trade is kind of getting seat time, getting in the game, making trades, screwing things up, studying your mistakes, learning from it. There's just no replacement for that. There's no strategy or anything that can replace seat time. So that'd be my recommendation to anyone learning to trade is, get in the game. So that's, I guess if you want any more info, I wrote a book, kelltrading.com. It basically goes over this strategy. And then I write a newsletter at theswingreport.com where I, just try to identify opportunities that I'm looking at. And then those Traderline guys, I did a masterclass with them, which is basically a very in-depth, review of the strategy, kind of how I look at weekly, daily charts. I go over, all these different types of things that I use, which I have all that stuff in the book too, but, it's more in-depth. So if you want to look at any of that stuff, that's there. But I would emphasize, really the number one thing that all you should do if you're trying to learn is, figure out a strategy, whether it's something along the lines of what I do or whatever else it may be, and go through, I like to trade more liquid stocks, go through, the big liquid winning names of the last 20, 30 years, the Apples, the Amazons. Baidu was a big stock when I was coming up, and go through them bar by bar and, mentally trade them, really put in the work. And I mean, I'm talking, I've done this going back 20, 30 years on many names. And, I use OneNote, snip things out, put it in a folder. You really got to put in that work and try to master whatever your strategy is and get in the mental reps. There's just no replacement for that. That's what's going to give you conviction in real time when you're actually looking to trade the market.
Awesome. Awesome. Thank you. TSDR, you had a good question. You were kind of running by me at the beginning of this to ask for Oliver. Hey, unmute your mic. He's got the book there.
By the way, here's a book. Go snag it up on Kell Trading on his website. It's already great. I imagine I'll go through this, 10 to 12 times by the end of the year here already. So I know you've got some experience early on the institutional side of trading. As all of us are, small fish, as you alluded to, what are some big things that you learned there, and how critical was that experience of the institutional side of trading for you?
So here, I'll give you like very quick high level. So my background is my dad was a market maker, so they supposedly they still exist, but the way I think of what a market maker is the guys on the floor that yelled all day. I'd go down to the floor. I grew up in the Bay Area, and we'd have a half day from school. You'd go in, there's paper all over the place. Like, it was amazing. And so trading was, sort of the family business, sort of, I guess, well, it was like, that's what my dad did. But so I actually, I never wanted to trade because, just for other reasons. But I kind of got into it when I graduated college. I just like wasn't able to get a job, and I don't know. I ended up taking some money, going to New York, and I put up money at what I would consider to be kind of a bucket shop in modern day standards, where you put up like 5 or 10 grand, and they say, oh, like, we're going to let you trade our money or whatever. But really, they're just leveraging you up, and they're making like a penny a share on all your commissions, and they don't teach you anything. And it's really a crapshoot. But when you're 22 and you read a couple trading books, you think you're going to like take over the world. So I did that, and I lost all my money. It was like 5 grand. So it wasn't like a massive deal. But it was a big deal for me at the time. That was like a lot of money for me. But I kind of had to go home, regroup, started, studying the market a little, and I ended up getting a job at like a more legitimate, it was still like a prop firm, but it was basically a group of prop traders, small, there was like 7 or 8 of us, that, they had raised some money, and we were basically a hedge fund. And we actually did international arbitrage, which is much more complicated. We would trade stocks between Australia, London, and the US. I traded the Tsunami Open for Japan, which was insane. So I got some experience doing that, but I was an assistant for these 2 guys. And I had one mentor who still trades to this day, who was a real swinger. I mean, he took some shots, and I mean, he would really make a lot of money, and he would lose a lot of money. And then I had another mentor who was extremely conservative. I mean, he would basically make money every single day. I mean, he was really good, but he basically traded this one stock called News Corp, which is, they're like, they own the Murdochs, they own like Fox and all that stuff, but it trades between the Australia and the US. And I mean, this stock like barely even moved, but he would basically take 1% out of it like every single day of the week. It was unbelievable. And so I got to see just like 2 totally different personalities, 2 totally different ways they approach the market. And the conservative guy who basically made money all the time, he actually doesn't trade anymore. And the guy who was a real swinger, our fund ended up going under. And I'm not going to say it was all his fault, but I ended up having to trade him out of like a significant amount of positioning in between 3 countries in the 2011 taper tantrum. And so I kind of started following him initially, and I got into a hole, which I was fortunate to work for a place that actually took some risk on me. I think I was down like 60 grand or something like that, which for them was like not that much money. But again, for me, like I was like 23, I was like, oh man, I'm down 60 grand. How am I ever going to make this back? And I found this guy on Twitter at the time by the name of Trader Florida, who I still to this day, I mean, I sort of think he's probably like the greatest trader I've ever seen. Um, and he's no longer really on Twitter anymore, but he would literally do these short videos like every single night, and he like taught me how to read volume. And I mean, he changed the whole game for me. He would call turns in the market like in advance based on the volume. I mean, he'd be like saying the market's going to bottom, right around here, and people would be like talking crap to him, and then it would literally bottom like 2 days later. It was unbelievable. Like, he was unbelievable. But so I learned a ton from him, specifically, and that's really what kind of got me on the right track. I actually like started trading really well, started learning chart patterns, bull flags, descending channels, whatever it may be. And I traded my way out of my hole, and I was making, pretty good money. And then unfortunately the fund went under, which, I was actually, I had my second biggest day the day we went under, but, I was the smallest book, so it didn't really help out all that much. But from there, I got a job at BTIG, which is I don't know if I'd say big, but like, yeah, I think pretty big institutional trading firm. And I worked on what was called an outsource desk. So I don't know if any of you guys know what sales trading is, but sales traders are guys that basically they're hunting for order flow all day. So they've got a client that's like a big hedge fund or a mutual fund or something. Maybe they want to buy like 1 million shares of Apple, like whole different scale from what we're doing. And they need, I guess Apple's not the best example because you can go clip off 1 million shares of Apple, no problem. But, maybe 1 million shares of, some like mid cap stock where maybe it would take a couple of weeks to buy that. And, they're trying to go find a seller and pair them up. So we had a lot of sales traders, but then I worked on what was called an outsource desk, where literally we had clients who they didn't want to hire a trader internally at their fund, so they outsourced it to us. And I knew their positions, I knew the size of their positions, and I just executed their orders all day. Literally there was a stock which like I can't say, but a well-known name that when it IPO'd in like 2011 or 12 or something like that, I literally bought like 100,000 to 1 million shares a day of this stock every single day for like, I don't know, 6 to 9 months. I mean, we bought like 15-20% of the company. And via doing things like that, I did start to understand kind of how bases were built, bigger bases, like big weekly bases where the stock's selling off and this guy's buying like 1 million shares and it's tanking. And I'm sitting there like, what's this guy doing? But then over time, he soaks up a lot of the supply. And then next thing you know, it's breaking out, like 3 months later, and he's pulling all his shares from the short sellers. He's pulling his shares and it's creating like a big short squeeze. I got to see pulling his shares from a locate. So guys that were short, like basically had to cover, there were games like that some of these big fund managers would use. So I got to see some of that stuff, which was informative, but more than that, I was trading my personal account the whole time. And so kind of like what I said earlier, where it's all about kind of getting screen time, I was getting screen time. I was getting exposure to the market. I was making mistakes. I was losing money. I was making money. That's really probably what the key was when I worked there, more than any of the actual institutional type stuff. So I wouldn't say there's anything in particular. Like every now and then I see something where I just kind of like know what's going on. When I see a big print hit the tape or something, I just kind of know like, hey, that's going to be the low of the day, and I'll like get long. Which there's some of that type of stuff that maybe I don't notice, but is there in my subconscious. But I also think one of the other major things that you should know is that I think most hedge funds are just as bad, if not worse, than most retail. So like everybody talks about like the smart money or whatever. I think some hedge funds are like the dumbest money that ever existed. So I wouldn't put them too high on a pedestal. I guess is one of the things I learned. If some hedge fund guy goes on TV and says he's long a stock, like I'm just as likely to think, oh man, this thing's probably topping out than to think it's like going higher. So, that'd be one of the big takeaways is just a lot of these guys have no idea what they're doing. So, that's kind of my overall background, a little long-winded, but if you have any more questions there, just let me know.
Yeah. So I got one, and this is a little more maybe market related. So mainly just like, where's your focus in the market right now and into the new year? And especially, if we do, if we were to pull back and reset on some things, where would, majority of your focus be?
Yeah. So here, let me so here's the weekly. You guys can see my screen here.
Yep, you're good.
So here's the weekly. This is the daily. This is the 195-minute, and this is the 65-minute down here. And so I'll look at the NASDAQ. So the NASDAQ for me is kind of the base index, if you will, that I look at because I trade a lot of tech stocks. And so bigger picture, kind of how I see things is we had a 3-wave down bear market, which a lot of times corrections or bear markets will happen in, moves of 3. And then we broke this descending trend line. We came up, and when we back tested the 20-week here, a lot of people use the 30-week. I just keep it consistent, and I use the 10, 20-week. But if you go study kind of the 2000 to 2003 market, or if you go study after 08, that bear market, once we back tested this 20-week and held it, we actually traded to all-time highs in both of those instances, which are 2 of the bear markets I've studied most extensively. So really for me, this is kind of when the market kind of started, a different environment than obviously this. And most of this was led by large cap stocks. So NVIDIA, really, it's been the best stock for me all year. I'm still trading it, mainly just because Trader Florida taught me, never leave your wingman, your number one stock. And it's been my number one stock, but it kind of led this move, and it was, the best kind of high beta name to trade. But a lot of the other names that did well were like, Microsoft through here, Apple through here. Apple, actually, you want to see relative strength, go look at this chart versus the indexes during this bear market. It held up extremely well. But now we had this correction, right, where you'll notice we had 3 waves down. And actually, I sort of thought right in here when we resisted here, there was potential this was going to look like kind of the 08 bear where we rolled back over. But that's another story. You'll notice we had huge expansion bars here. We were really stretching higher. And then as we got deeper and deeper into this correction, things were pretty tight, right? It's not like we were expanding down. And that is what ended up happening. So like I said, literally, I covered all my shorts like right down in here, like literally 343. I think I posted it on Twitter. And the only reason I covered is just kind of like what I said earlier. I just don't like to be short as much. So the only reason I covered is because I'd made like pretty good money, and seemed like as good a time as any, more than anything else. But I was more looking for us to kind of rally up into the moving averages and get faded again. But it's what happened on this day in particular. We were kind of wedging up, and we traded down, and we held this support area. So I guess I can't show you my 65, but if I could, you could really see it. But it's really this bar right here where we traded up, we got rejected, we traded up, and we came down. And, if you think about it, when I talk about price structure, we traded up, we traded down, we traded up, we traded down, we traded up, we traded down. And it started to look more like kind of I'm not going to call it an uptrend, if you will, but, like the structure was starting to change. So I actually got long the market on this day after that happened. and then I got really long on the follow through. So this to me is kind of a mini, what I call a mini base. And when we broke out here, that's where I got a long signal on the market. And I wasn't sure right here, but then when we had this reconfirmation, you know, I got even longer. And really, I was pretty heavily invested by about here, but I was in stuff like NVIDIA that I'd been trading. I was actually short NVIDIA into these lows and flipped long. And it did really well through here. But as we started to get up into here, into this area, and all through this consolidation, is what we started to see is these more kind of small mid-cap names start to take the baton. And often in like year one, or I'll call it move one of a bull market, you're in a lot of big cap names, and that's really what's doing well. And then in the second move, it's more small cap type stuff. So right now, I think like the small mid cap areas are what you want to be focused on. And I'll give you a look at some names I'm talking about. But basically, when we broke out of this, you know, wedge, or yeah, like a descending wedge, you know, it really looks like a big cup and handle. And you know, we look very good here. I think the Russell also is somewhat participating in that we got a buy signal, and we're up into this resistance where it wouldn't surprise me if we kind of chopped around a little bit here. But I was impressed today how we didn't give too much back. I still think we're going to keep chopping here. You know, if we could chop, you know, do something like this, that'd be ideal. But if we can take at this level here on the Russell eventually, you know, maybe in a week or two or something, you know, I don't know. You know, I think there's a chance that we can really start to see this more small mid cap stuff really perform. So kind of some names, you know, I've been long. This has been my best name. You know, I was actually a little late to this, but I got in this in here and I sold it here, and then I bought it back, you know, in here. And I'm kind of sitting with this. I think Bitcoin looks pretty good as far as what it did today. It you know, it traded up and it held the 20-day today. So I actually think Bitcoin sort of looks like it's going to break out again here. And I really like coin in particular because, I mean, look, I know everybody trades Mara and Riot, and these things look great. But you know, I sort of think Mara in particular is a little bit sketchy. Riot had a buy area for me today, but so coin is really where I can put, you know, a good chunk of money. And I think it's kind of the institutional favorite. I think if you kind of look at this whole Bitcoin exchange type space, or whatever you want to call it, obviously the SBF thing, you know, they were the biggest exchange and they're out of the game. And then I don't know all of them, but you know, Kraken or Binance, you know, Binance seems to have been the other number two guy. They're all gone, and I don't think coin's going anywhere. I think coin's legit. So I think there's a chance for this to kind of continue to dominate, take share. I mean, it's where all the institutional money going into Bitcoin has their capital, you know, like BlackRock, their money's at Coinbase is my understanding. So we're a little extended into this broadening line here. That's actually why I sold here, but we're holding the 10-day. So I'm certainly not saying like buy now. You know, I re-entered here and I moved my stop up to here today, but I think there's a chance this can kind of get up into this kind of 200 area, if you will. But overall, you know, I think this is a stock to stay focused on. So this is one of the main names I'm focused on. You know, NVIDIA, like I said, I'm always kind of trading NVIDIA. It seems to have kind of lost its power, but I'm long it from, you know, in this area, and my stop is now, you know, probably up to here. You know, maybe if it could go sideways a little here, I'd consider adding to it. But it doesn't quite have the juice that it had earlier in the year. I think AMD has probably been the better trade. It's a little extended at this point. But I'm long this one. I'm along this path, which kind of one of the things I talked about is that every name kind of has a change of character bar. So that's right here. When I draw these magenta arrows, that's what that signifies. So you can see just the massive volume. So volume equals price, cause equals effect. And so I'm thinking this path, this is right where the year to date, or sorry, the all-time high anchored VWAP is. It's like right in here. I'm thinking if we can get through there, this can trade a little bit better. I'm long from, down in this area. So I'm really, I don't have any risk on it. It's more a question of like, is this going to work? If we can follow through. My stop is probably up around here now, but I'd really like to see us follow through before I have a hard stop there. But that this is a name that if we can kind of get through, this area, I think it can start to more trend. Obviously, it's been trending here, but more of a trend like this. That's really what I'm looking for. And coin kind of had that too. This is where I make big money, is when things really trend. And so crowd is a name that this has been maybe my best trade, as far as I had a lot of size in coin, still do, but I've had a pretty big position here. I got in it down in here. You can kind of actually, here, I'll go through this trade because it'll kind of show you that sometimes it takes a couple tries. So I actually really got in this thing in this area, and I thought this was just gonna rip. And then I ended up stopping out of it. Normally that I might not have sold there, but you could just kind of tell the whole market wasn't ready yet. Like crowd was actually showing relative strength, but it just couldn't get going. But then when the market bottomed, because of this and the fact like it was trying to go when the market wasn't ready, I knew like, hey, when the market's ready, this thing is going to rip. And so I got pretty heavy in this thing. I can't remember exactly where I added. I was kind of adding, all through here just a little bit. I kind of do what I call force feeding, where like once I have my core on, if the name acts right and performs and responds right, I'll add little bits and pieces. And so I was doing that all in there. And then, sorry, let me, and then I don't hold like huge, like I'll hold like I had a pretty big position here. So I sold a little bit before earnings, just because. And then unfortunately, I didn't do a good job in this earnings day. Normally I would add back, but I added back, on these pullback areas, around like 232, I think. And I've been riding it higher. One of my concerns here is that we're getting pretty extended from the 10-week. So I actually think this stock is probably, I'd probably be a net profit taker on this at this point. But, I'm really, we were holding the 10-day and now we're holding the 5-day, which is usually a sign that things are accelerating. And I'm hoping we get a blow off top here. I'm just not sure if it's going to happen. And if we did, I would be probably selling into that. But this is a name that I think is going to reset and should be a focus stock. It's certainly going to be for me, kind of depending how it bases out. So I'm not sure if it's done or not yet, but I wouldn't buy something new this extended from the 10-week. But pay attention to this stock. I've been long Shopify from down in this area, and it had a day to take note bar, or the change of character bar right here, but it was just too early. So more recently it had it right here, and I think we're kind of breaking through this neckline, and it constantly all through here, it keeps getting attacked with downgrades and all this crap. And it's been responding very well. So I think there's more into this. I'm sort of looking for it in time to trade up to this broadening line, and that's where I'll probably be looking to take some off. D-Dog is a name I'm in from down in here. And, you can see we traded up, we pulled back. So like, this would sort of be the wedge pop, I guess, sort of a unique one in that it happened on an earnings gap. But that's the change of character bar and this big inverted head and shoulders pattern. And we traded up, and there was no real crossback, just sort of because of how this happened, with it being a big gap. But to me, this is like a basin break here. The basin break is usually a little longer. The crossback can just be like more of a pullback, but the basin break is a little longer. And, we're just kind of extended here. But I think if this can continue to stay above this pattern, this is a name to kind of keep an eye on once it sets up again. It's hard for me to like give names now because we've obviously run so much, but these are names that I think if they set up again, this is another name I'm in from down here that's done well. This ESTC is a name to keep an eye on. This is the highest volume ever on this weekly bar, and I think we're just a little extended here. But if this can chop around for a few weeks, I think this is a name to keep on your radar. This STNE, we broke out of this huge weekly bottoming base. We've had a couple areas to get long, but keep an eye on this. This is like basically a 2-year base, so I'm betting it rallies for more than 5 or 6 weeks. And the fundamentals here are pretty good. It's really turned around its earnings and sales. But so I'm looking at like a lot of software type names that might be turning, where I've identified some big volume signatures. This one, it just really hasn't quite got going yet. But some of these, if they can kind of consolidate well and base and let this 5 and 10 week catch up, these moves might not have even actually started yet in reality. Maybe I'm totally off on that. But I like those kind of software type names. Look at this Nutanix monthly. Like, we cleared through a pretty huge area, all the way back to the IPO, like right here. And so, we're even a little extended on the monthly. So, we're a little extended on the weekly. So I'm not saying buy it here, but, these are some names to kind of keep an eye on. But the specific themes, like, I don't think the Bitcoin thing's going anywhere. And I'm not like a Bitcoin YOLO, like buy the dip kind of guy. It's just something that seems like is not going anywhere. That's the only reason I say it. And I think these small mid cap type names, more in the software type space, that's where I think we can do well if we're actually in the second leg of what I think is a new bull market. And that's kind of identified a little bit by ARC. I see a big inverted head and shoulders here on ARC. I think very likely, I don't know if it's going to be right here or a little higher. I sort of think we're almost there, but I think we're going to need, a little bit of consolidation here, some sideways action before we're able to really take this out, kind of how I'm thinking about the IWM. And who knows, maybe these reject there, and my whole thesis of us being in a new bull market is incorrect, and we roll over. I'm not sure, but if we can set this IWM and this ARC up, that sort of space of the market is where I want to focus on, and I want to look for big patterns like this Rivian. I think there's potential that this could be building out a bigger bottom. I'd really like to see it, kind of get above this area and then this area before I really want to try to really hold it. But, you can see how we burst off the low here. We filled this gap today, which is where a lot of that, downside volume came into it. So if we can start to kind of live above here, there may be more to this thing. SMCI, which was I had good chunk of this move. And I got out of it before earnings because it had what I call a second extension, which I won't try to explain that today, but there's potential. I know a lot of people are very excited about this thing right now. I'm still a little bit skeptical of this bar, whether it's actually going to really go on a major trend. But if this could trade up and get up into here and then base out, I think fundamentally there's a chance this thing could really rip again. So I'm sort of keeping an eye on it. And then this is a new stock kind of on my radar. I literally had it teed up down in here. So this would be an example of a crossback or a basin break, depending on how you interpret it. But to me, this was kind of the first move breakout here. And then we pulled back into the moving averages. And, we've just ripped, we've ripped 20% here in
We got long I got long FRSH through that inside day at $20.60.
hell yeah. I mean, dude, this was a great setup. I had it teed up and, I don't know why. I wasn't fully a believer in this weekly. But this was a great entry. And part of the reason I'm keeping an eye on it now is, I mean, look at this volume in here. I mean, they are coming after this thing. And even today, we're pretty extended, and this thing is still unable to pull back. But the volume was lighter today as it was kind of flat. So sort of is what I'll give you an example, like how I think. So like right here, I've identified this as a name that could be very interesting. So how do I think about how to attack this? Well, I never chase, not so much that it can't work. It's just that, I'm not looking to flip things for like a day or two trade. So, if I buy something like right here and it works for a day, it might just knock me out, a couple days later. So I'd rather wait for like a really good entry. So kind of when I analyze this chart, I'm a believer that, gaps don't always fill. And I actually think they're a sign of strength. So like, I don't think this gap here is going to fill. So I'd either like for this to continue to go higher and then kind of back test this area, as like the 10-20 day kind of comes into it and look to get long there. Or I'd like to just kind of see it chop around here, build sort of a consolidation of some sorts, let these moving averages catch up, and maybe start to pick away at it into the moving averages, assuming that it chops around correctly. If it just has like huge sell volume come into it, I'm not going to pick away. But and then look to like add when it breaks out of its pattern. So like that's kind of how I think about something like this. I see it had like nice volume here, and it kind of had reconfirmation volume here. So I like how these volume patterns are building. Something like this, where you have huge volume here on the all-time low, I actually view that as a very good thing. That could be like capitulation. Think about the guy, Kathy Wood or someone who like bought it up here. They finally got fed up and sold out, which just gets rid of supply. And then we've been able to consolidate in here for like a year, which is what's needed to create a big move, right? You need a huge base. And so I'm hopeful at least that maybe we're starting, kind of that move. We tried to push here and we weren't quite ready, so we consolidated back down. But notice how we expanded and we had a wide range up move. And then we were really tight, kind of on the like comeback, or I don't know how to describe it. But to me, that's a sign they were aggressive buying. And then, it was very contained. But at some point, hopefully we can start, more of a consistent up move, kind of like you saw in something like this crowd, where, crowd was in that phase, maybe right here, and it came back, but then eventually it more expanded. So I'm hoping for something like that, and Fresh and, some of these other names. I'm actually in some of these, which I'm not quite sure if they're going to work, right now. And if they don't work, that's fine. I'll just get out of them, for a small win at this point. But I'll keep watching them. And if they eventually get ready, I want to catch the real move. That's really my goal.
Mm-hmm. Brock, could you care if I ask another question quick?
Yeah, make it real quick. Yep.
Yep, a real quick. How frequently do you scan through like hundreds or thousands of stocks? And secondly, going back to D-Dog, One of my troubles is, this never tapped the short-term moving averages after their earnings. And I found a lot of them like Shopify and DDog on that initial move. It just gave 1 to 2 days of rest and then went right away. I'm sure you view that as a sign of strength rather than unable to get in. That's my main question.
So yeah, I mean, like, that's kind of sometimes it's about, like literally like right in here, right, is where I thought the market changed. And then when we had this bull snort, I just kind of decided like, hey, I don't think this is going to retrace. In 2022, I probably would have been trying to short this. So it's like, it's kind of taking the whole environment into account in addition to the chart. So again, like 2022, I probably wouldn't have been looking to play that. But based on us kind of having that huge bear trap on the indexes and seeing the power in the indexes, is what I'll do sometimes on these big gaps. And it's actually what I did with Datadog is I'll buy like a little bit with a wider stop. And then as it starts to hold up, I'll buy a little more and I'll buy a little more. And then on this day, I can't remember exactly how this one went, but I have a 20, well, now it's a little higher, but I have a 22% position here. And so I think I started at like 3.5 to 5%, and maybe I got it up to like 9 or 10 in here, and I kind of shored at my stop a little bit so that I'm not risking too much. And then I probably like doubled my position and raised my stop. So that's one way I play these gappers where it's a huge gap is I'll kind of piece into it. And as I get more though, I only buy more when I think I can raise my stop. Because otherwise, like, you're just like asking to get smoked. And again, I probably wouldn't have done that if I didn't just get this feeling like the market was ready to rip, kind of once we had that bear trap. And then I typically do really, really well in November, December into kind of that second week of January. So I'm more likely to take risk, around this time of year. So that all kind of played into it in addition to, the gap. Whereas Shopify, let's see, so Shopify actually did the same thing. And I think I got a lot on here and I ended up selling it here for like nothing, which like, I'm not saying that was right or wrong. But then when it kind of had this turn day, I started buying it back and then I topped it off here. Understanding that I was up a couple points here, I was able to kind of just put the trade back on basically. But that's how I played Shop. I think Shop was a little easier than Datadog because Datadog on this day, basically it went. And if you didn't kind of push on that day, it was sort of gone. So Shopify to me, like the easier entry was like right here at like 61.50. But so that one I think was a little easier than Datadog. But sometimes these don't work out. I'll show you a trade that I actually had a little bit of this into earnings because I just had a very strong, like 2.5%. I'm never just gonna like start a position but I had a little bit of this and then I was pretty aggressive right here. And then this was that like reversal day in the market. I actually cashed this in the whole thing and I made like 10%. And then on the open here, it just like flashed down. And I just kind of like, again, kind of based on experience, I just sort of like knew like, hey, this is going to bottom here because of how it happened. And I bought everything back. So I was in a really good position on this name and that like I had taken some off, bought it back lower. But literally I got stopped out of this yesterday. And I'm pretty frustrated about it actually. But I was kind of looking at it. I thought we had a nice kind of cup here, and I thought this was gonna go. But in hindsight, if I'm really looking at this name, because I try to be objective even when I'm just like frustrated. These are kind of our change of character bars, and the volume profiles on this thing are really, really good. I sort of think it's just a little extended from the 5-10 week and that maybe it'll set up, down here on the 20 day in time. but I've kind of struggled with this name in general. Like I've thought I've had it multiple times and it just hasn't really worked out for me. But so, you know, I'm not trying to paint the picture that like I just buy these gap ups and they all work. Like I screw them up, you know.
Yeah.
So it's not an exact science, man. It's just
Got it.
I
in the
love
same vein.
I love your ability to just like get back in a name like right after like just getting out of it. Like that's like my biggest weakness is like having a stock that has a really nice setup, getting out of it for some reason, and then being able to get back in like as soon as it proves itself again and acts right, you know?
yeah. I mean, yeah, I don't know. I definitely have a pretty short term memory,
Yeah.
which I think is, you know, a good thing. But yeah, it's just yeah. I don't know. I mean, it's just yeah, I'm able to do that.
That's awesome. Well, I guess we could wrap it up there. Great session. Once again, thank you for coming on. I'll have this recording posted, guys, like right when we're finished, and I'll have it sent over to you, Oliver. And yeah, I think we're good.
All right, cool guys. I appreciate you having me. Happy to come on again, you know, in a couple months or something. And you know, hopefully we're getting into a better market for everybody, right?
Yep.
But happy trading and you know, thanks for having me.
You too.
All
Where
right.
else can people find your stuff besides your book?
I mean, really, like I just started this swing report thing. That's kind of what I'm doing now. And you know, that's pretty much it. Yeah.
One chart 6 on Twitter. I'll type it in the chat for you guys.
Yeah.
What's that about? All
Great
right.
follow
Okay.
on Twitter.
So I mean literally I've been posting on Twitter for I don't know, a long time, like 10 or 12 years, and I had like 300 followers for a long time, which was kind of nice actually. And I played quarterback in college and my number was 16, so it was just one chart 6. That's really it.
There you go.
Yeah.
Oh yeah.
All right. Well, thanks for coming on, Oliver. And we'll see you guys tomorrow morning, 9 a.m.
All right, see you guys.
Here we go.